All right, good afternoon, good morning, depending on where you are. I am in the Eastern time zone in the United States, so it's just a little after lunchtime for me, maybe lunchtime where you are, or you may be looking forward to lunch. Any way you slice it, hope you're having a fantastic day, lots of action in markets. As traders, this is the type of day that makes it fun to do what we do. Lots of news, we got data, we got Fed week. Lots of action, potential, certainly potential for some movement and volatility. And so, if you trade Nadex, certainly could be an exciting week as markets move. So my name is Jason Pfaff. This is part 2, 6 chart patterns every trader should know. We did part 1 last week. If you're just now attending part 2, that's great. You're in the perfect spot. We're going to review the content a little bit as we go. We'll be a little more brief than we were last week on the content review, but then we're going to jump in and I'm going to share my screen. We're going to look at some live charts, live setups. We'll look at a range of different markets just to look for some examples of some of the chart patterns that we'll be discussing. So thanks for joining us. And if you were here last time, again, quick review, and we're going to go live. If you've got questions or particular setups, anything you'd like me to take a look at, feel free to send those in the chat box. We had some great questions and insight last time. We do every time. One of the reasons I love working with individual traders via Nadex is I often learn more from webinars like this, from the level of insight and questions than I could ever share. So appreciate in advance your efforts on the give and take, and your feedback and questions will certainly be valuable to me as we make our way through the content here. Real quick before we get started, looking at 6 chart patterns every trader needs to know, part 2. Just wanted to take a quick look at the disclaimer. It is something I want to make sure everyone's aware of. Certainly today, as we're looking at live charts, live markets, I answer any questions about things that we're seeing on a chart. Just want to make sure everyone is aware that, certainly trading at any point involves financial risk, may not be appropriate for every investor. Everything I present here today is solely for educational purposes. There's certainly no solicitation, no forecast of future direction, no advice or anything of the like with respect to trading. And certainly with that, want to remind everybody, past performance, past patterns, not indicative of future results. All right, as I said, my name's Jason Pfaff. I'll, at the end of the visuals, give you my email address. It's jason@thedutchbook.com. I've worked with Nadex as an educator for over a year now. Love the Nadex community. Appreciate that each of you have joined us here today. If you'd like to take a look at some things on the Nadex platform while we're working our way through the content here at the same time, feel free to go out and register for a free and permanent demo account. It takes 2 minutes. It's super easy, in my opinion. Nadex.com/demo. If you haven't already done that, if you have, feel free to crack that open as we look at, again, just some patterns as they happen on the charts. So real quick, again, just as a review, a couple of assumptions as we discussed last time form the foundations of trading with chart patterns. If you believe that the market moves in certain patterns, and if we think of markets at a high conceptual level, they are fundamentally collections of people coming together to figure out the price of an asset or a market. So if you believe that those types of things can move in patterns and that those patterns may be able to be repeated, then this approach might be for you. In addition, if you just want to learn some additional vernacular and vocabulary, you're reading your favorite blog or watching your favorite financial program and someone refers to a head and shoulders pattern or a falling wedge pattern, you want to know what that means so you understand kind of their content and what they're communicating. Certainly this webinar today is for you. We'll cover some of those terms. If you have questions about other patterns we might not have covered, feel free to drop those in the chat box. Happy to discuss anything that's important to you. Also, and I'll highlight some examples of this, whether or not you trade specifically based on chart patterns, and I'm someone who always advocates to individual traders, you really want to have a well-rounded set of tools. What patterns can show you about the potential, keyword potential behavior of the market is also helpful. Whether or not a pattern lets you time a trade perfectly or specifically or show you the perfect level of resistance or support is always easily debated. But as let's say you have a rising wedge pattern, which we'll look at here in a second, that can tell you that volatility in a market is coiling, and you can infer some things from that behavior, as you see on a candlestick chart. You can look to news flow, you can look to other market dynamics and see why that might be the case. So whether or not you end up making a trade, or maybe it confirms what you're already thinking about a trade, just recognizing the chart pattern and being able to link it to your understanding of the behavior that it may be representing certainly can be valuable to you as a trader. As always, it takes some time and some practice. That's why I recommend the nadex.com/demo account. You get some fake virtual money in there, so to speak, to experiment with, strategize with. You can try out different strategies, different markets. One of the things, and we had a lot of great questions on this last time about time frames. If I'm trading, if I see a head and shoulders set up on a 15-minute chart, but I'm holding a weekly binary or something like that, folks have a lot of questions and thoughts at times around time horizons, different lengths of contracts and markets. On the Nadex platform, you can trade a 5-minute binary, a weekly binary. That's one of the reasons why I really recommend getting familiar with the demo account. If you haven't already, you can try out some of those things, try out some of these new strategies, find some time horizons that work with the way you think. Ultimately, there's no right or wrong time horizon to trade. It's whatever's most comfortable for you. Through the practice, the discipline, the experimentation in the demo account, folks can work their way to a better understanding of that. So just to sum up our mental approach here as we dive into the content, remember chart patterns in any type of trading system is about a lot more than direction. We're looking at entries and exits and sizing trades and risk reward. Understand why a pattern may work. You may need to do some additional reading after this webinar, learn a little more about your favorite patterns and understand the type of behavior that may be feeding into that. Stay balanced, keep it simple, practice, and stay positive as well. One of the things we talk about in terms of staying balanced and keeping it simple, as I said earlier, use a variety of tools. Have a variety of tools in your toolbox. You may really enjoy and get chart patterns down. Certainly want to continue to diversify your skill set and understand why. Really emphasizing this point, I know throughout our initial time here, but it's really important. Understand why these patterns may be working, or understand why they may be forming and setting up. As a trader, one of my foundational rules is you should be able to explain any trade you make in one maximum, or really in one sentence why it may work, and you should have a keen understanding and be able to explain in one sentence why it may not work. One of the mistakes I see, and we've all made it, I've made it, new traders make is, they get some signals, they get some indicators, they learn one way of doing things, they jump in head first, that enthusiasm is great, but they may not understand the actual dynamics of the market or the asset that they're trading. They can't explain the trades, they just know that an indicator that they bought turned green, or a system that they took a webinar or a workshop on turned red. Understand why those trades may work, understand why that behavior may be showing up, and have just a deeper understanding of the markets you're trading. That'll benefit you as a trader for sure. Okay, the 6 patterns we're going to look at: double top, head and shoulders, double bottom, rising wedge, triangles, and falling wedge. We'll clip through these real quick as some review, and then we'll jump back and forth between the principles and the content, and some of the charts, you know, again, if you have suggestions or something, I'm happy to take a look at anything and see if we can see some patterns. So double top reversal, this is a firm reversal pattern. You have a rising trend, you have a peak, a trough, a peak, and then the reversal. Ideally, you want to break the previous support, which is noted as the depth of the trough. Double bottom reversal, so we have a falling trend, hit a double bottom, and then the reversal is confirmed as we break the previous level of resistance above us. This is a double bottom reversal. Declining trend, hit once, peak, ends up looking like a pyramid as we break down again, hit the bottom again. Ultimately, we get the reversal rising trend as that is confirmed as we break resistance above us. So let's look for some patterns here. I trust everyone can see my screen. We're looking at dollar yen. And we have a good setup here. And I'm just going to keep this pretty live here as we look at some patterns here. So we can see back here through the spring and summer, potential double top, right? And we have our declining trend coming off this trend line here. So that's step one on the reversal. So at this point, now we see it working its way back up. Hope you can see that. We have two peaks, and then we have the bottom of the trough, and we work our way back down. We ultimately break this trough to confirm the downtrend. However, as you can see, we don't really get a lot of juice out of that to the downside. Again, Forex, as you guys know, you could have a central bank meeting. You could have, you know, the yen is typically seen as a safe haven currency. You could have a major news story with, you know, North Korea, and folks could flock to safety. So you have a pretty good double top setup here. We just don't have a tremendous amount of downside after we break support, but we do have some, you know, several. Let's see, we go from, you know, 108.626 down to, I mean, the candle gets down. So, you know, 100 pips or so. The other setup here, and there's more art than science in charting. If you can follow on my screen here, we really have a triple top setup. So if you're following here, so we have our downtrend, we go once, trough, twice, trough. We do break that support. We start to work our way back up. You can see we have this long-term trend line coming down on the yen. We wedge back into a trend line off a triple top. That to me at the time is going to be potentially pretty bearish. And you can see we had a strong move there. The other setup we have here, and I know we haven't covered this, so if you were here last time, we'll jump to this without reviewing the slide. If you weren't, skipping ahead a little bit, but I want to take advantage of looking at it. We do have a bit of a head and shoulder setup here as well. So if you're trading this market real time, you've got a couple of things at work here. And dollar yen certainly is a very popular pair, one I learned Forex trading on. So you have your double top, you do break your support, works its way back up. You really form a triple top. Here, at the same time, as it forms this triple top, you can see the head and shoulders pattern here. Start writing in some text here. Left shoulder, head and the right shoulder. And again, this is really set up as you wedge against this trend line here. Come into a trend line, you would expect to find resistance at the trend line. You have a triple top, and at the time you hit the resistance of the trend line, you can start to see your head and shoulder setup, which is eventually confirmed on the right shoulder. And for those of you that recall, if you were here last time, our neckline's here on the head and shoulders. Again, this head and shoulders isn't perfect, I understand. But again, pretty good setup. And you can see you really have three different patterns come together there, all of which would indicate a bearish move. And you can see a pretty bearish move resulted, ultimately breaking this level of support right here. Ultimately, you know, it's a pretty extended move for the dollar yen, but pretty bearish setup and ended up breaking down pretty considerably. All right, I see another setup here in dollar yen, but we will get back to our deck here. And we'll get to that pattern here in a second. All right, we'll find a double bottom too. So head and shoulders, we just reviewed that, right? With dollar yen, this is actually DXY. So again, declining trend, left shoulder, head, right shoulder, and a breakdown. And again, lots of questions last time on different time horizons. You know, I'm looking a little longer time horizon now. We can look if we have time at short, you know, 15-minute tick charts. But this is a pretty good head and shoulders setup here we see on the DXY dollar currency index. So here we are with the DXY. So here is the head and shoulders we just saw, and I promise I'm drawing this for a reason here. So I see something else. So here's left shoulder, head, and then right shoulder. Okay, so we had our downtrend here. Then we have our move through the pattern, and then it's really confirmed with our downtrend here. Because remember, to really confirm the head and shoulders, we want to break what's called neckline support. Once we've broken that here, we historically, you know, think of this as the pattern being on, and you can see DXY certainly moved lower off that. Now, check this out. Where are we today? And again, I say today, this is a daily chart, so these take place over a little longer time horizon. So broadly speaking, and I would put us honestly, it's my opinion, right about neckline support right now. So you can see here in the DXY, you have two pretty similar head and shoulders patterns set up again. The first setup here is from the number one there. Nice creative name for my pattern. This is from last fall. Hey, same time of year. Looks like, you know, it started up in September. And pattern number two actually started before then, really started over the summer. Again, I'm on a daily chart right now, but you can see the pattern kind of happen there. So pretty cool. If you're trading chart patterns, you know, we're right at neckline support. Again, this is a daily chart, so you would need to definitely consider the time horizon in your own trading plan, but interesting to see a similar setup there. on the same market. And again, this is the DXY. So this is just the dollar currency index, not a treatable market on Nadex, but still interesting to see this play out. Cool. All right, let's look for a double bottom here. Let's look at gas. This is a tradable market. I love energy markets, love oil. If you've been with me before, I love to talk energy. Have an oil webinar out there on the YouTube, the Nadex YouTube channel. Incidentally, if you're newer to Nadex or you're looking for some additional resources, go out to YouTube, search for Nadex, favorite the YouTube channel. I'm telling you, I'm out there all the time, just reviewing stuff, looking at stuff, fantastic educational resources. Really runs the gamut, whether you're into Ichimoku and candlesticks or looking at ways to trade volatility. Great series on how to trade overnight. As a trader, I'm really impressed with Nadex's just variety of resources. Go out to the YouTube channel, favorite it, so you always get the updated videos, alerts. They put stuff out there all the time. You can pick and choose as to what you want to watch when you know what's out there. So go check that out. So here's gas. So pretty decent double bottom, although we've got an interesting situation here. So as you can see, January of 18, pretty serious peak here on gas. Gas can be volatile from time to time. So we headed pretty steep south last January. This is the winter. All right, so here we go. Double bottom in action. It's close. And then we worked our way up. Now here's the key. And this is why I say, you know, these things are more art sometimes than science. This is not a true, perfect, traditionally speaking double bottom, right? We don't, and I'm going to zoom in here. I mean, our wicks are really close. If you measure by the wicks, we're a little unbalanced. With those longer wicks, you may be just going to the bar. It's up to you as a trader. Lots of folks will tell you they measure to the wick perfectly. It's certainly up to you. As it's your chart, it's your decision. There's no right or wrong answer. I think most folks would say, though, you want to be as precise as you can. All right, so we've got our declining trend. We've got bottom forming up. We have a nice rise out. As you remember, really breaking this previous level of support is the key to confirm the trend. However, in this case, I would also encourage us to consider, if we zoom out, that 360 really was an anomaly, an idiosyncratic move. I would almost consider some of this previous noise over here, maybe the peak before, as your support. Gas can be very weather driven. You get a sharp cold spell in the dead of winter and it can drive just a crazy run on price sometimes. So interesting double bottom setup there. Not exactly perfect, but interesting. So we had a potential double top here, a couple of potential top moves that didn't exactly work out. One of the things I wanted to do today is kind of show you some stuff is kind of half set up in real time. You can decide for yourself. Looks like we just broke through those tops. If you're looking at gas live, you know, interesting. A lot of movement in gas lately. All right, let's look at. All right, so here's a possible setup. Like I said, I wanted to look at some stuff that was totally just half done, like you have to look at in real time. Now, again, we've talked, you know, on a head and shoulders, you're not, if you're following kind of this letter of how to trade the pattern, you're not really going to trade this until it's a confirmed downtrend coming off the right shoulder, breaking neckline support. But as a trader too, I mean, you want to see stuff set up and kind of have it on your watch list. So I was looking at this. This is Barrick Gold. This is an individual stock, part of the indices that you can trade on Nadex. They're in the news this morning for a merger. You know, anytime you start to see, and this is really premature, I want to be really clear, way premature. But one of the questions I get a lot when I do chart pattern webinars is folks, how do I see this kind of setting up? And you got to use your imagination. Again, give yourself some wiggle room. There's more art to science. This is why I love the demo account. But anytime you've got a rounding that you break through to the upside, you want to watch that for another potential kind of rounding peak. And then you would want to watch it as it comes down to, again, which in this case, if this were to set up as a head and shoulders, neckline support would be here. So what you need to see from here is break down to here and then back up to here. Whoops, drew that too far. And then break down below neckline support. So again, premature, but you can kind of start to see how I at least would use, what I'd consider my imagination there on a potential head and shoulders. Let's see if we can find another pattern here in Barrick gold. All right, keep looking here. All right, here's Amazon. Always in the news. Everyone's favorite. I see a good setup in Amazon. Let's go back to the deck. Let's review some more content, and then I'll kind of show you. So here's a falling wedge. This is ultimately a bullish reversal. As we talked last time, we have the parallel lines that narrow in a slightly descending trajectory. This is a falling wedge, strong bullish reversal pattern. The hard thing on wedges, I love wedges, but they're hard to time. And this is, again, why you really want to see the pattern set up and then it break to the upside, to break that level of support on the falling wedge pattern before I would consider trading it. And folks always want to see it as early as possible because you don't want to miss out on some potential upside, right? That's why we trade. Again, I can't encourage enough. There's a balance, and we talked earlier, the mental approach, staying balanced between going too early and waiting too long. This is where I think veteran traders, a newer trader evolves into a veteran trader when they're willing to wait a little too long as opposed to going too early. Again, there's a balance, right? Because if you do wait too long consistently, it's just not going to happen for you, and that's not good. But you got to consider your risk, your reward, your own trading plan, and timing moves is really hard. And it's really, really hard to do consistently. It's really hard to do. It's really, really hard to do consistently. What you want to see is the pattern set up, confirm the pattern, and then trade the momentum. I encourage that. Everybody will find their own comfort level with what works for them, but chart patterns is less about timing and more about finding where the momentum is going and following that pattern. Again, it's also understanding the nature of the behavior behind some of these moves and understanding why this might be the case. Okay, here's a rising wedge, more of a bearish reversal pattern. It's your falling wedge in reverse. You've got rising wedge pattern, two parallel lines that are narrowing as that volatility coils, and then there's a steep breakout. And then triangles, closely related, but this is a bit different in that you've got a parallel line to the bottom, a perfect kind of flat line, and then you've got a line either sloped down or sloped up. It's going to be bearish or bullish depending on the angle of the resistance line above the market. So if it's sloped down, in this case, this is a bearish continuation pattern. It's easy to remember in the sense that your triangle line is sloped, your angle line is sloped down, and that's going to be in the world of chart patterns, thought of as a potentially bearish pattern. This is a cool one, as I talk a lot about kind of understanding the behavior about it. You've got a market that's moved lower. If you start on the left, this is US dollar, Canadian dollar. It's moved down. It's finding support, but the line is falling, right? The triangle forms because the support is able to give less and less energy to a move higher in price. So it bounces in the area of the line, moves higher, comes back to support, finds a bid where it's been, but the highs get lower, right? And so this is an easy one to imagine and to start to extrapolate some insight as to the behavior of the market. The market's moved lower, it's found support, it's moved higher, come back to support. Moved a little less high, come back to support. The bulls in this case are running out of steam. If you're long dollar in this case, you know, there's a bid and there's folks bidding it, but they're able to move it less and less and less and less. And the longer that market stays close to that support line without being able to move any higher, the more vulnerable it is. Support breaks, you know, and again, it's a little overly simplistic, but you can think of those bulls in the situation just getting tired of continuing to bid when it's not working, it's not doing much, get frustrated, sell, and the market collapses lower as that support fails. That's an overly simplistic explanation of the behavior at work there, but certainly you can kind of imagine that taking place. So we talked about wedges. Saw a I've got my pitchfork on here. That's a different webinar. We will take that off the Amazon chart. Love Amazon. Guess I shouldn't give product endorsements here, but pretty good falling wedge here. Which, I mean, this is almost getting to a. I mean, we go by the wicks here, so, but you guys can kind of see the falling wedge pattern start to set up. As remember, falling wedge is thought of as bullish. The challenge here, though, as you can see it, I mean, this is real time. This is a daily chart. The challenge really becomes, you know, if you think of this as potentially bullish, I cannot in any way, shape, or form tell you which way this goes, nor do I know, but the pattern would indicate potentially bullish. Something else, and this is a little bonus material for this webinar, but we talked technical indicators last month if you're with us. I've got a 50-day moving average here. So bonus round, we are right at the 50-day moving average. That is thought of in a larger sense as potential support in markets. The 50-day and the 200-day are widely discussed technical indicators. If you follow markets, if you watch, you know, your favorite program on a Bloomberg or CNBC, the 50 and 200 are very popular. So we're right here at the 50. That could be thought of as support. In addition, we've got a pretty steep and I'd say narrowing falling wedge. So, you know, based on the content we've covered, you know, you could say that this is, again, historically, traditionally, folks would think of this as being at potential support with the 50-day and coming to the apex of a falling wedge pattern. So, pretty interesting setup there. Google. What do we have with Google? Kind of have a bearish triangle here. This is early, okay? So actually I want to move this out. Kind of like seeing these early setups because this is how you guys have to do it in real time. Let's take it back here. Now we've broken under the 50-day historically breaks under the moving average are thought of as bearish. And then we have a potential bearish triangle setup. I mean, this is again early, but you can see I'll number them here. You know, here's your one high as you enter in the pattern, and then here's kind of your second high. Kind of have a double top situation here. And then you really just down till you get to down here, have your third high, and we've already reversed off of that. I'll zoom in so we can make sure we see this. So this is a pretty live one here. So we got a peak, got a rising trend. So we're coming into this peak. We come down, hit it once, hit it twice. Could be thought of as a double top off the rising trend. A little loose, but we come back down. We're in now a formation. Could be a bearish triangle. Here's our third high, lower. So you guys can see coming back to support here, the falling series of highs. As this moves through, if this trend line holds, again, big if, you would still get, you know, a couple of highs that continue to be lower potentially. You know, this could break out today at any point, but if the trend were to hold as this moves sideways, one would expect lower highs leading to a potential breakout. So pretty interesting setup there. Take a look at Apple. A similar setup. What's interesting about this is, you know, folks think of these companies as potentially, you know, similar. Again, this is really underdeveloped. This is really, you know, kind of live. But you see another potential triangle here. A little different. I mean, we got our peak. It's a little cleaner, actually. Got our first peak here, second here, and then our third here. You guys can see the triangle really forms with the lower highs and the consistent support. So in this case, support has been consistent right at about this level. The highs are getting progressively lower. You can see the triangle start to set up. Still well above the 50. So you got a mixed bag with your indicators here, but you can kind of compare that now to what we just drew with Google. Again, a little different, but gives you some perspective. All right, we'll look at oil. All right, so this is interesting. We'll go back here to last month. We have what I would consider a falling wedge here, pretty steep one. Pretty good falling wedge here. And I generally like my pattern. Folks ask when you start the pattern. You know, as long as the two parallel lines are pretty closely related in terms of where they start, I think you're going to be generally okay. But you guys can see the falling wedge here. And I'm going to draw an arrow to show you a falling wedge. I'm not doing that to direct price as much as the pattern is falling, right? You can see that as we learned in our content, falling wedge typically leads, or I shouldn't say typically, but it's typically thought of as a potential upside breakout. And then here, honestly, starting to see formation of a rising wedge. So as that last pattern kind of had a breakout and matured. And again, I'm just drawing the arrow to show you the shape of the direction of the pattern, not the market. You kind of have a falling wedge, you have liftoff, and it kind of then channels into a rising wedge. Pretty interesting setup there. All right, I'm going to take a look here at the chat, see if we have any questions. Thank you guys for being here. Thanks for hanging out. If you have a question or something you'd like me to look at, or you've heard of a different pattern we didn't cover, please feel free to drop it in our chat box. Would love to hear from you. All right. So please, I guess this is gas. We looked at gas. Let me know any questions you have, comments, see.